Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody is having a great day in the market. You know, I always wish the best for my viewers and subscribers. And speaking of subscribers, if you haven't hit that red subscribe button yet, go ahead and do that. I post a portfolio update Monday through Friday, and I also try to get another video out for you guys, a news related video or a dividend increase video, something like that, every day. So I try to get 2 videos out a day. So if you guys respect the grind and want to see content from me consistently, go ahead and hit that subscribe button. But today we're going to go over the overall portfolio performance, and we're going to go over the individual holdings and then my watch list. So for today, we're up $308, up 1.33%. For the week, we're up $422, up 1.83%. For the 1 month mark, we're up $132, up about, up about 0.55%. 3 month mark, we're up $2,800, up 13.61%. For the year, we're up $909, up 4%. And all time since April 13th of 2018, we are up almost $3,200, up 15.5%, which is phenomenal. Cannot complain about that. Next, we're going to look at the individual holdings, starting with Realty Income. This is one of my focuses for this year. Realty Income is one of my favorite companies. It's in my top 5, and I will be allocating a lot of funds towards this once my savings account gets to where I want it to be. 16 shares, about $960 of market value. Average cost is $46.31. 4% of the portfolio is in Realty Income. Up $6 today, up $223, up 30%. We do have a dividend coming in on the 15th. I do have 16 shares now, so that dividend income went up a little bit. It was at like $3.25, I think, but now it's $3.75. Next, go down here, we should be able to see real quick to see exactly. Before it was $3.51. But yeah, I've held it for a really long time. Looks like since May, or before that, yeah, I've held this stock for over a year. So, dividend income went up when I bought another share, and I bought that with dividends, so it's awesome. Next, we have Coca-Cola. This is one of my favorite stocks as well. One of my main focuses for the portfolio. 21 shares, almost $1,100 of market value. Average cost is $51.39. 4.6% of the portfolio is in Coca-Cola. Down $13 today at $15 total, up 1.4%. Next, we have FRT. We have 1 share, $83 of market value. Average cost is $113.40. About 0.4% of the portfolio is in FRT, up 97 cents today. Total, we're down $30, down 26%. Have a dividend coming in on the 15th of $1.06. This is one of those that I want to boost up because it's a good value. I don't want it to be a huge position, but it is a dividend king. I'm still bullish on the company. I just prefer Coca-Cola and Pepsi over FRT. And then we have Altria. 151 shares, about $6,200 of market value. Average cost is around $44. 26% of the portfolio is in Altria. We're up $33 today, down $382 total, down 6%. But we do have a dividend coming in on January 11th of almost $130. Excuse me. Which that will be allocated to AT&T stock. So I reorganized my portfolio based upon how big of a position I want it to be. So Coca-Cola is going to be bigger than FRT, which is going to be bigger than MO. The ones at the bottom are the ones that I'm overexposed to, and I will not be buying any more shares of those companies. Not because I'm not bullish on them or my thesis has changed or anything like that. I'm just overexposed in those companies. Being like 20+% of the portfolio is way too much for me. I want to be at about an even distribution amongst 20 stocks that I have will be 5% per per holding. I don't want that to be the case, but I don't want some positions to be so insignificant that they might as well not even be in the portfolio. So I'm just going to buy the stocks that are down the most for that set of months, and I'll reallocate and kind of balance the portfolio out over time. I'm not super focused on it. I'm okay to be overexposed to have years to rebalance the portfolio. But the key to my strategy is when I rebalance, I'm adding more money. I'm not taking anything away. So I refuse to sell a stock like Altria or AbbVie due to the fact that it's such a big position, because I want to buy those and hold those. I don't want to trim any position because, as you guys saw, I'm getting $130 from Altria. I don't want to lose any of that dividend income. I just want to boost other stocks so I'm not as dependent on Altria as I am right now. So then we go into the next set of months with AT&T. 126 shares, $3,700 of market value. Average cost is around $30. 15.5% of the portfolio is in AT&T. We are down about $6 today, down about $36 total, down about 1%. Love AT&T. I know it's about 15% of the portfolio. This is going to definitely go up, and I'm okay with that. Love AT&T. Next, we have AbbVie, which is overvalued for me, but I still love the company. We have 60 shares, $6,300 of market value. Average cost is $72.22. 27% of the portfolio is in AbbVie, up $24 today, up $2,000. Total up almost 47%, which is crazy. I love AbbVie, it's just overvalued. So it's one of those that I want to buy more of, but I don't want to buy more of at this price. Next is PBCT. We have 14 shares, $181 of market value. Average cost is $10.80. About 0.8% of the portfolio is in PBCT, up $1.40 today, up $29, up 19% total. Then we have Lowe's. We have 2 shares, $322 of market value. Average cost is $100.86. 1.36% of the portfolio is in Lowe's, up $1.42 today, up $120, up 60% on Lowe's. So as you guys can see in the way that they are ordered, AT&T is the biggest focus. Then it's going to be AbbVie, then PBCT, then Lowe's. I have nothing against Lowe's. Actually, I would prefer a bigger holding to Lowe's than, say, something like AbbVie. But given that it's so overvalued right now, both AbbVie and Lowe's are positions that I want to boost. Just they're overvalued at the current moment. Then we have Aflac. This is going to be my gold stock for this set of months, and it has been for over a year. I just couldn't invest due to the car accident, but now I'm excited because I love Aflac, and I will be pouring money into the stock. We have 1 share, $43.35 as a market value. Average cost is $35.75. 0.2% of the portfolio is in Aflac, up 15 cents today, up 7.60 for total return of 21.24. Love Aflac. It's going to be the biggest position for the 36912. Next, we have McDonald's. 2 shares, $4.20 for market value. Average cost is $214.90. About 2% of the portfolio is in McDonald's. 44 cents were up today, down $8.92, down 2% on McDonald's. Love McDonald's, love the business model, love the franchise model. It will be a very big position for the overall portfolio. Next, we have Black Hills, my utility. 2 shares, $119 of market value. Average cost is $60.53. 0.5% of the portfolio is in Black Hills. We are down $1.48 today. Total, we're down $2.48, down 2%. I'm going to have a pretty big position in Black Hills. Utilities are really important. I think they offer steady income, reliable income, and they're actually homegrown. They're in Iowa, so I like Black Hills a lot. Next, we have J&J. Just for me, it's overvalued currently, but I do think this will be another very big position. I love J&J. We have 2 shares, $315 of market value. Average cost is $135.79. 1.34% of the portfolio is in J&J. Today we're up $243. Total, we're up $43 on our 2 shares, up 16%. Then ExxonMobil is the last one of the bunch. We have 86 shares, $3,800 of market value. Average cost is $52.74. 16% of the portfolio is in ExxonMobil, up up $255 today, down 710, which isn't even close to how far down we were before, but we're only down 15%. So we've been down like 40% or 50% on Exxon, so 15% doesn't even bother me. Huge gain today, though. I'm not surprised to see oil kind of bump back up. I think it will continue to climb as the economy kind of goes back to normal. Uh, I'm already overexposed. I'll probably get to 100 shares of Exxon. I like the company a lot. I just don't want to be overexposed for too long to oil. But as I said, I have more than enough time to rebalance the portfolio, and I don't plan on selling any positions, just adding to different positions to even out the portfolio. So, guys, currently my main focus stocks are within the portfolio are Coca-Cola, AT&T, and Aflac, which stayed the same from last year. I just didn't get to pour a lot of money into those. Next, we're on to the watch list, starting off with McCormick. McCormick at $93 a share. Not quite enough upside for me, but I do want to buy it. It's a dividend aristocrat. Dominates its space, dominates its sector. It's phenomenally run company. I actually had a little bit of a back and forth between this and Allstate, which I might just add Allstate because I want more insurance in the portfolio, but I don't want to get rid of McCormick. So, huge fan of the company, and it's a dividend aristocrat. Next, we have PepsiCo. This is going to probably be the second biggest position in this set of months. I do want Coca-Cola to be number one, but I might put Pepsi as the number one holding, just by the amount of money that I put in the stock. But at $144, not enough upside, but this is one of those that I'd buy and just wait for it to go down. And so I'd start a position of like probably a max of like 5 to 7 shares. But when it went down, I'd make sure that I had enough money to allocate in the account to really jump on Pepsi because I do want Pepsi to be a major holding. Love the company. Next, we have Procter and Gamble. This one's a no-brainer. Been on the watch list for a really long time. At $137, I'd buy it. Then we added Clorox. I go back and forth between Clorox and Colgate, but the reason I chose Clorox is because I like the product line a lot, and I love Hidden Valley Ranch, which they own. So you gotta buy what you love. So if I own Coca-Cola and Hidden Valley Ranch, it's pretty much my life in the stock market. Uh, my life represented in the stock market. I love ranch dressing. It's my favorite, and Hidden Valley Ranch is my favorite brand. So might as well own what you love, right? But at below $200, it's definitely a buy for me. 3M at 171 got almost enough upside for me to buy it. Not quite yet, but I will be jumping back into 3M. Then we have Disney at 100 and pretty much 180. I'd buy it just because I want the potential upside in Disney Plus. Berkshire at 227. I'm buying that no matter what. So, want more insurance in the portfolio, and in my opinion, Berkshire is the best insurance company in the world. So, definitely want uh, some Berkshire. But the focus for the portfolio for the watch list is going to be PepsiCo, Procter and Gamble, and of course 3M. I think I'm going to start a tradition of buying Berkshire during Christmas as a Christmas present to myself. Since I love Berkshire Hathaway so much. But so guys, the main focuses of the portfolio this year are going to be Coca-Cola, AT&T, and Aflac. I will allocate extra funds to stocks that are like in second place, being Pepsi, um, Procter and Gamble, and say McDonald's, because I do want McDonald's to be a pretty big position. But that's where I'm at currently, guys. Thank you so much for watching. Remember to hit the red subscribe button if you have not yet. Welcome to all the new subscribers that we've gotten. I'm super excited. So happy Tuesday. Hopefully everybody has a great green day, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.